bear market level over here. If we want to flip this all bullish, we need to break above, of course, this price point, and to actually head towards there, we need to hold the levels which we're currently at. Otherwise, we're going to start to correct with risks of course, continuing much lower. Quant is continuing to try and break this $136 support, which is also lining up with this 382 $1 below at 135. So I have now measured from the bottom of this pump over here until the top, and we've got the 135, which is the 382 fib level, sitting over there nicely with that level we've been calling out 136. And the reason why we gave this level over here, we'll get into that on the lower time frames, but just focusing on the fibs and the moving averages, well, the moving averages are saying we can't come below 125, and this correction will continue with a daily candle close below $133. As long as we are actually above this orange line, price can reclaim these two moving averages over here, the 20. So we need to see price closing above the 20, as well as this blue one over here, the 12 EMA. So get these on your charts and just wait for daily candle close. We could even make it a bit simpler. Looking to the left, the structure is giving us clues. You can wait for a daily candle close above 143, and that's where we know we're actually continuing up, because we are holding 136 at that moment. Again, we are currently doing so. That's what's protecting us from the continuation down, as well as the 382, as well as the 55. So these three things are tying up together from this point until this point, and it's holding us up as support. So we need to see the continuation, the follow through. Otherwise, there is a correction on the cards, guys. Understand that. And it said, remember, the 200 sitting roughly at 125, a level that we've marked out a long time ago in the past. But just gonna get rid of it for now. It's not too important. We've got the 200 right there, but the golden pocket over here, the 618 sitting at 120, and we know actually you can come as deep as 111. So going forward, I don't want to see price losing the 1 fib level. Otherwise, we do have a dip, a really nasty one, back down to potentially even $75. I'm not calling for that. I'm just making you guys aware that if $100 is lost, that is the case. We've been saying with this double bottom and this double bottom breakout, ever since November the 14th down here, when we bottomed out, started coming back up, we were calling for $150 and even upwards of 180. We could actually go to 188, I think it was. Reason being is we use the fibs, and this tells us that this area, the golden pocket over here, could be a dead cat bounce scenario where prices dip so much that the bullish pump afterwards could just be a retracement before continuation down. Of course, for the bulls out there, they do not want that to be the case, and the bears want this to be a dead cat bounce. We need to be very careful. We know that this is confirmed once we lose this low. So the earlier signs would be these EMAs and these fib levels being lost, and that's why if we want to go and push through this descending resistance and this golden pocket over here keeping us bearish, remember the bear market level over here, if we want to flip this all bullish, we need to break above, of course, this price point, and to actually head towards there, we need to hold the levels which we're currently at. Otherwise, we're going to start to correct with risks of course, continuing much lower. But I will be here along the way to let you guys know. We are hoping that we get this absolutely explosive bullish breakout towards that 786 fib. Look where it was. What we were saying earlier in the video about 188 is the level over here. And yeah, fib level 1. Fib level 0. This is the golden pocket. Only once we push through the 618 have we created the reversal wave, but it's not as simple as that. We need to see follow through above the 188. So 188, once we're clear of that, it's onwards and upwards towards $250, $260, which we mentioned in an update the earlier in this week. However, of course, it's not a guarantee as long as we're below the golden pocket. In actual fact, again, we should be putting lower lows, but just because that's what should happen with the fibs, push, exhaust, continue, we know that with this run up, we've got the golden pocket over here, and we can go as deep as this, and you can actually come down to here and still continue up. So even if this dip gets nasty, we just need to maintain above $100, and we're going to get this explosive bullish continuation where we could get prices of $250 per quant. But let's keep it a bit relaxed at the moment. I'm always seeing these pages saying, oh, don't miss this pump and all of this. Like we can chill. Like a lot needs to happen first. We're at crossroads where it can either be bullish or bearish, and we're simply waiting for it to decipher which one it wants to do. We are prepared. We have our levels prepared. Use your fib from the bottom here to the top. It's telling us the 382. Well, in actual fact, in the start of newly formed uptrends, we can just bounce off the 382. So this is why on the channel this whole last week we've been talking about 136 on the channel. On the 4-hour time frame, you can see it's being defended so well by this 200 moving average over here. And already earlier yesterday or in the night, throughout the night, we had another scare where we did go below the 136. But again, just like the times before, we need consistency, as we were saying in the last few updates. Consistently close below. So one close below is not enough. Let's see a further candle, okay? And let's see the follow through of losing the low. So the direct next candle just close back in. Same thing here. One breakout, one break back in, one breakout, one break back in. So no follow through, no consistency with the, consistently staying below this level and following through and breaking these wick lows that it created with the red candles on the breakouts. It wasn't going lower. Why? Because we got this 382 fib, but luckily enough for us, we already had this 136 level. If you don't remember why, I measured from here to there, and that was actually a golden pocket. So this is why we say on the channel, that we've created the reversal wave by actually getting above this. You see here, you dumped, you're meant to push into it and continue lower. That's what you should do, but we're always aware the reversal wave can happen when you flip it in support and you go to the 1618. This is why we're calling for 160 back over here. And price target was met. It's just that we were, of course, anticipating 170, 180, 190. How do you do so? You need to hold above this golden pocket and you will get 170, 180, 190. But only if you hold above the 136. Otherwise, we're dipping down. Dipping down to where? Where's the 0 fib level? Incredible. It's on the 0.5 fib of the other fibs. So let me just get rid of this now. And we can see that it's saying that we can't really lose where we are right now, of course. But you can actually come deeper and still have a chance of reclaiming. So you see this 0.5 fib, you can come down to here, reclaim this green golden pocket over here, and we will actually go up. So this is why I'm trying to tell you guys that we can actually afford to dip and still go ahead and break. But right now we're being defended by this, so it's giving us opportunity to actually break out now rather than dump and then break. This is what we want to be the case. But again, $100 is the level that we can't lose. If $100 is lost, Jesus, that's all I'm gonna say, guys. On the 4-hour over here, get rid of this. So we've already explained the levels we're watching. However, if we want to see a bullish breakout, of course, we're still holding 136, which is beautiful. However, you can see when we lose this as support, we're being trapped underneath. So currently we can see we're getting trapped underneath this golden line over here, this moving average, the 55. So we're coming into the apex. Do you understand that? How we have this 200 support and this 55 here. So that's actually a descending triangle just using the moving averages. But we have one bottom, we have two bottoms, and we can call this a double bottom neckline. So if we're actually seeing price breaking past this neckline, $142 on the 4-hour or even the 15-minute time frame or the 4-hour time frame, $140 being cleared, that's going to signal a pump back up towards $145, $150. Okay, let me just get you a more specific target, but yeah, it'd be back towards $150. Yeah, there we go. So 149, the same the double bottom target is. So you could just take profits a little bit earlier, but to be honest, guys, I think this would be the time that we actually go ahead and attack this yellow line, so a little bit further up. Maybe wrong here, but again, we're not saying that this is a W as of now. We've just said the moving averages are saying it's a descending triangle, so actually an M pattern. However, and this is because the moving averages are forming an apex where the two lines eventually meet, and this will force a breakout. Now the pattern, it could be bearish, but still price could go bullish. So that's why we've prepared with this double bottom over here, 142 being your neckline. Equally, if we're losing the let's just call the 382 over here, 135, that's going to be the bearish continuation back down to 127. Thank you guys for tuning in. Make sure you do like, subscribe, and comment, as we're nearly at 5K. I'm also going to be doing a giveaway on my new Twitter. You have to be following if you want the free course, and more details will follow there. But if you want to take action on the course or the mentorship anyways, do message me for a discount just before we hit 5K. The discount will last until. Thank you guys.